All right. I think, yeah, the numbers are growing, as I mentioned, and we're expecting a few more people. So I'm just going to get started. We're a couple minutes into the time that we had booked with you. And whether you're on your first, coffee of the day, your second coffee, your afternoon tea, thank you for being here. I hope you're in a comfortable spot. Um, Warmly welcoming everybody to this session. My name is Freya Struthers, and I'm here with WaterAid Canada. Today, I'm joined by Erica Kinas at Seva Canada, Paul Dixon at Tree Canada, and Andrea Helfer at Code. Together, we're really thrilled to be bringing this special estate planning webinar to you today. So thank you very much for making the time to join us. Before we get started, we wanted to take a moment to acknowledge that this webinar is being presented on the traditional unceded territory, the Algonquin Anishinaabe people, whose presence here reaches back to time immemorial. As we have attendees joining us from across the country, we also wanted to acknowledge and affirm the inherent and treaty rights of all Indigenous peoples across this land. And now just a quick few housekeeping items before we begin. This webinar is being recorded. We've already turned that function on. So we'll be sharing the recording with you after the session for your future reference. If you wouldn't mind just keeping your microphone muted and your camera off so as not to disturb the presentation and the technology side of things, that would be helpful. If you have any questions at all, please do pop them into the chat on the sidebar on the right side of your screen. Our presenters will answer them during the Q&A at the end. And now I'm delighted to introduce our presenters for today's webinar. From Mann Lawyers, please join us in welcoming Sarah Macaluso and Kate Wright. Sarah and Kate will explore the different ways that you can make gifts to charity through your will or using other gift planning vehicles, as well as the tax benefits associated with these gifts and some considerations when planning for the future. So thank you again for being with us today. And with that, I'm very pleased to hand things over to Sarah and Kate.
Thank you so much, Freya. Thank you everyone for having us here today and for taking time to learn a little bit about charitable gifting. Just a little bit of background about who we are. So we are both wills and estates practitioners at Mann Lawyers. So talking with our clients about gifting to charities is something we do on a regular basis as part of the estate planning process. So just a quick disclaimer as we get started. Just got to move my slides forward. So we are lawyers in Ontario. So the content of this presentation is specific to Ontario. If you reside outside of Ontario, there may be different rules that apply. So you always want to get advice particular to your jurisdiction. What we are providing today is general information, not legal or tax advice. Every estate plan is different, so you can take this information and discuss your particular circumstances with your own legal and tax advisors. What we're going to cover today are really the basics of charitable giving. So when, who, why, and how, not in that order. But really, how do you go about it? What should you be thinking about? What are the considerations? How do you make an effective gift? All of the sort of discussions we have with our clients when they come to us and say, hey, I'm thinking about including a charity in my estate plan. So we're going to start with the why, because I think that's the most important for people who want to give to charities, right? Often we're giving to charities because there is a cause that is important to us. We have supported charities throughout our lifetime. Maybe the opportunity to give a gift on death allows us to give a bigger amount than what we are able to do during our lifetime. And ultimately, it feels good to be able to leave a legacy, whether big or small, for a cause that's important to you. So for most of our clients, that's what they're saying. They're saying, I have supported the Cancer Society. My parent passed away from cancer, or I have a dad dealing with Alzheimer's. So these are something that's near and dear to their hearts, and they want to make sure that the gift is effective. There's also a financial aspect to charitable giving that we can't deny. So there are generous tax incentives for charitable gifting. So that is a consideration for some of our clients as well. So those two things can go hand in hand. Two things can be true. We can want to do good and have some tax benefits while we're at it. So that's generally the why that people are coming to us with. So then we'll talk about the who. So we've indicated here some of the best practices that you need to think about when you are adding a charitable bequest. So one is you want to be sure that you include the proper legal name. And we'll get into how you look at this in a couple of slides, but you don't want to be using sort of like a short-term, you know, kind of a nickname for a charity. You want to ensure that you properly identify the legal name of the charity. You also need to be clear about the purpose of the gift. So that doesn't mean you have to indicate, it's to go to this program, or I want the funds to be used for, this thing, but you can identify that it's to be used for the general purposes of the charity. You can identify that it's to go to a particular stream. Some charities will have different programs. You might, if you're giving to like a family organization, you might say, I want it to go to their domestic violence program. So you want to be sure that it's clear. And we'll talk a little bit more about what that looks like as well. You don't want to leave that vague. Another thing is to consult with the charity. So we encourage our clients to talk with the charity. Every charity has a different way of running. They have different programs. They understand the best way for them to receive funds. And particularly if you are leaving a larger gift, there might be some documentation that you want to put in place to assist with that gift on death. And so reaching out to the charity and having a discussion with them about your intentions, and also making sure that your intentions align with their purposes too, so that if you're giving a gift to a charity and maybe it's a charity you don't know much about or you don't have a history with, you can speak to them about how the funds are used, where the funds would be directed, what's important to you, what's important for your values, so that your gift aligns with their purpose. Now, in some cases, charities may no longer be in existence on death. So, charities unfortunately are not always there for time immemorial. So you can provide alternate direction in the will in that event. So you can provide that it be given to a charity of similar intention. So there's clauses that we would include to say, if this gift or if this charity is no longer in existence, give it to, in the trustee's discretion, the charity that's sort of in the closest, has the closest purpose to the charity that you were giving it to. Or you could provide a backup charity if you wanted to. You could say, if this charity is no longer in existence, then I want you to give it to this other charity. You can do that as well. So let's talk about the proper legal name. So there is on the CRA website, you can go and you can do a search for charitable names. And I'm just going to flip ahead because here's an example of what that looks like. So this is a screenshot from the CRA's website. So this is a search for Children's Hospital of Eastern. So we just did a quick search, and then 3 things come up. There's the CHIO Foundation, there's the Research Institute, and then there's the Ottawa Children's Treatment Center. So as lawyers, we want to identify with our clients, which one are they intending to give to? If they aren't sure, they can consult with the charity to make sure we are properly directing that gift to the charity that they intend. The other thing is you will look here, you'll click on this link, and there will be a charitable number, a charitable registration number. So that should be included in the will as well. So the trustee is not going to have any issue if you leave a gift and you say, give $50,000 to CHIO. The trustee is not going to be certain which of these institutes you intended. So you want to be very, very clear. You also want to be clear about the purpose of the gift. So there are 3 things to think about. It cannot be against public policy. So you cannot make a gift that would discriminate on any ground. But that is not to say that you couldn't give a gift to help disadvantaged segments of society. So you need to think about the purpose of the gift, and your lawyer should be considering whether or not that purpose is going to be against public policy. So, for example, if we look here, if you give a gift to a university that will give scholarships only to Anglo-Saxon Protestant students, restricting the proportion of scholarships that female students could receive, that would be against public policy. But if you give a gift for students who are in financial need, that would not be against public policy. So then going back, we look at, okay, is the gift certain? So if you say, in most cases, people are saying, I want to give a gift to, the Ottawa Humane Society for the general purposes, or I want to give a gift to WaterAid or Code or SEVA, whatever it is. If you just say, give a gift to a charity on the condition that the charity is successful. Well, what does that mean? What is successful? Does that mean it's operating? How are we measuring success? That's not a condition that your trustee can realistically determine. But if you say, give a gift to a charity on the condition that the charity is successful as my trustees determine, then you have made it certain, because now it is up to them. So if you just say that it's successful, they don't know what your definition of successful would be. But if you say it's successful as they determine, now you have provided some parameters, and you've made it so that the trustee gets to determine that definition. It's not based on something that you as the will maker had in mind, that they cannot determine what that condition looks like. So if you make a gift, you want to make sure that this is something that's possible to perform. And so there's an example. If you say, give a gift to support orphanages in Ottawa, but there are no more orphanages, then that's not going to be something that's possible. But if you give a gift to educate people to use typewriters, which now nobody uses typewriters, you could, using the clause we talked about before, finding some sort of charitable purpose that's similar, give a gift to a charity that helps people use computers, that helps people with sort of technological literacy. So it's a something that's close to the original intent, right? To use some sort of technological tool for writing. So being clear about the purpose, being clear about alternatives, understanding what you have in mind will help your trustee be able to make sure the gift goes as planned. So consulting with the charity is a good option because they will talk to you about how their charity works. They will talk to you about how the funds can be used, right? So they'll look at what you intend to give and where you intend to direct that, and whether or not there are any restrictions on the gift that you're making. They will also talk to you about whether or not they can accept the gift that you want to make. So we usually think, I'm making a gift to charity, maybe that's going to be cash, but there are other options that you can do. So we've indicated there, you can see it's called gifts in kind. So for example, you could give publicly traded securities, you could give real estate, you could give artwork, and proceeds from life insurance, RSPs, all of that. So not every charity is going to take real estate, right? For some charities, that would be a burden that they would not be able to manage. But for other charities, it might be something that they would like to have. For example, if you wanted to donate a home to a women's shelter or some sort of shelter, that might be something that they could take that another charity could not. So you want to consult and make sure that the gift that you intend to give is something that is going to be possible. You also want to think about how you make the gift. So are you giving the gift in your will, or with life insurance, RSPs, RIFs, are you naming the charity as a beneficiary? So if you do that, there might be a charitable tax donation credit that can also be claimed, and there are other benefits by keeping those funds out of your estate for probate purposes. So it might be useful to name the charity as a designated beneficiary. But of course, you should talk to the charity first to make sure that this is something that they can in fact receive in the manner that you intend to do it. So alternate direction. So what happens if the charity doesn't exist or the purpose can't be fulfilled? So we talked about this cypre clause, which means sort of as close as possible. So if a charity is no longer in existence, does the gift fail? Do you give the gift to a similar charity? The cypre doctrine would allow for that gift to be given to a similar charity, but you may not want that to happen. So you need to think about, as the person who is doing the gifting, you want to think about what are your purposes and what happens if that charity doesn't exist. Do you want to give it the discretion to the trustee to give it to another organization in accordance with the cypre doctrine? Or do you want to say, I would give it to another charity? Or if that doesn't exist, you want it to go back to be distributed amongst other beneficiaries. Everyone will have a very their own views on this, and it depends on their relationship with the particular charity or the particular cause. If the purpose can no longer be fulfilled, so same thought. So if you say, my purpose is to benefit, individuals who, I don't know. Let's go back to our typewriter option. So gift to educate persons who use typewriters. we can change that purpose and upgrade it if we have the cypre doctrine in there and if we allow for that gift to be used for something else. But you might say, I only want it to go to this purpose. And if it doesn't go to this purpose, I want it to buy medical equipment for children who have lost a limb. And like, that's the only purpose I want it used for. If that charity or that purpose can no longer be fulfilled within that charity, then you have to provide either alternate direction, or it can come back and be distributed amongst your other beneficiaries. So when does the charitable bequest take effect? So it's after death. So you can make gifts to charity during your lifetime, but what we're talking about is gifts that are made after death. And so, as I said off the top, this often allows people to make a greater gift than they could during their lifetime. But the bequests are revocable. So if you are giving a gift to a charity in your will, so long as you have capacity to change your will, you can revoke that gift at a future date. So if you decide you want to have a different charitable purpose, or that charity is no longer in existence and you want to update, or you don't like, what the charity is doing, or they get in, they've changed their direction, you can change your will and cancel that bequest. A bequest in a will to a registered Canadian charity can provide a tax credit against up to 100% of the donor's income in the year of death. And a lot of times this is a big benefit because there's a deemed disposition of assets on death. So individuals have, substantial taxable income in that year. And so this will allow for a reduction of those taxes. So how do you make your gifts in an estate plan? So, oops, I'm going ahead too much, sorry. So there's direct giving, donor advised funds, and private foundations. So we'll talk about each of these. So in a will, which I think is what most people are typically thinking of when they're thinking about charitable giving, they'll leave either a specific amount as a bequest. So I could say I leave $20,000 to code, and that's a specific bequest. You can give a gift of a personal effect. So if there's a charity that drives people around, you could give a vehicle, for example. You could leave a residual bequest. So you could give a share of what is left over after debts, taxes, specific bequests have been made. So after all that, we're left with what we call the residue. And I could leave all of that to a charity. I could leave a share of that to a charity. So it just depends how much and who my other beneficiaries might be. And you can leave a combination of sort of any of those things. So you may have multiple charities that you want to benefit, and you do it in different ways. You can also, as we talked about earlier, designate a registered asset or an insurance policy. So those are sort of the direct ways to give a gift. And there you can see some examples of that. So Humane Society, $100,000, residual gift 50% or half of the residue to a charity, a contingent bequest. So this would be if you leave a bequest to someone, but if that gift to them fails, you may want to leave that to a charity, right? So the example here is I give a gift of $100,000 to my sister, but if she has failed to survive me, then I want that portion to go to a specific charity. You can also give a gift over of a trust. So same idea, I set aside $100,000 for my son, But if he doesn't use all of that before he's passed, whatever is left over goes to a charity. So those are just different ways of doing giving. So donor advised funds are another way. And this is a fund that any charity, usually a foundation, can establish. And you make irrevocable donations to fund the account and provide non-binding advice to the charity. So the DAF is sort of, the funds belong to the specific charity. So you sort of set this up and you'll direct where those funds will be delivered. So that's a good option if you have a little bit more to give and you want to sort of look at gifting over time and making sure it's done in a proper manner. Another way to do it is through a private foundation. So we've all, seen different foundations that exist for charitable purposes. You can either set this up as a trust or as a corporation. It's typically going to be funded by individuals or family, and it has a charitable purpose and its own charitable programs. So this is something that usually is, if you have a much larger amount that you want to give and you want to have sort of continued control by family members after death, that they would be running this and making sure it aligns with your purpose, that would be an option for you. So if you look at this chart, you're going to see sort of the characteristics of the funds. So in terms of the control, direct giving, it's a one-time gift. You control where it goes. You can provide for alternatives, so you retain a lot of control in that regard. In a donor advised fund, you have an advisory role. The sponsoring charity sort of controls where those assets are distributed over time. And in a private foundation, there's a board and a governance system there that's going to control it. So you set it up and you would kind of control the purpose, but there's other individuals who are controlling the actual ongoing gifting. Simplicity and flexibility. Direct giving, very simple. A little less flexibility because, as I said, you have to be clear and certain about your purpose. So other than providing alternatives or maybe directing it to a specific program, you don't have a lot of flexibility there. Donor advised funds, simple, can provide a bit more flexibility, and then private foundations, complex, but more flexibility. There's no minimum contribution for direct giving. For a donor advised fund and a private foundation, as we indicated, those are more for bigger gifts. So usually around $25,000 for what we call a DAF. A private foundation, those are for like really large gifts of $1 million or more. Startup costs, none for direct giving. It's just other than your cost of doing your will, right? That's the cost for doing that. Same thing for donor advised funds, but for the private foundation, obviously this is reserved for bigger gifts. There's a lot more structure that's going to go along with that. So the costs, of course, of setting that up are going to be a lot higher. Administrative fees, none for direct giving. You're just giving it to the charity, and that's that. It's part of the administration of your estate, and the bequest goes out in the regular course as it does to any other beneficiary. For DAFs, usually around 1% of the assets, and same thing for private foundations. And recipients, so registered charities only for the direct giving and the DAF. And then for the private foundation, you may give to registered charities, but you may also have your own sort of charitable program going along with that. So that covers off many of the who, what, when, where. And Sarah's going to get to the what.
Thanks, Kate. So up to this point, Kate discussed the reasons why, how you construct, the reasons why you want to gift to a registered charity, how you can go about it. Now we're going to get into the what. So what can you give to the charity in fulfillment of your gift? And so in terms of what you can give a variety of things. You can give cash, which is our most general, which is the most common way of what someone gives under their will or through their estate plan, although it may not necessarily be the most tax efficient, and we'll get into that in a couple of slides. You could also give publicly traded securities. So, for example, if someone has BCE shares or Apple shares or shares in Tesla, that is considered to be a publicly traded stock. So you could give that share or those shares as part of your estate plan. You can give real estate, you can give artwork. We've seen clients give doll collections and stamp collections, although obviously I will get to the complications with that, particularly for the charity, but you can give a variety of different assets. The point is that what you're giving is that it's a voluntary gift with no expectation of return. So a gift is once you give it, you can't ask for it back. So for example, where someone is giving, perhaps doing volunteer hours for a charity or free services, those don't qualify as a charitable gift because you're expecting something in return versus giving cash or giving real estate or giving an asset or naming a charity as a beneficiary on a life insurance policy or a registered product like an RSP and a TFSA, that is considered to be a charitable gift. A big component of charitable giving is taxes. And while we discussed the ways we can best, or our views of the best way to structure the gift, taxes always plays a role, as Kate noted at the beginning. And in Ontario, there are 3 types of taxes. And in other jurisdictions, there's a combination of these taxes or some of these taxes that may arise on death. But for our purposes in Ontario, 3 taxes are applicable. That's a state administration tax or probate tax, as we call it, which is in Ontario 1.5%. Many other jurisdictions in Ontario also levy this tax, although it varies at its percentage. In Ontario, as I said, it's 1.5%. There's also income tax and capital gains tax, which is, of course, applicable across all provinces and territories in Canada. And charitable estate planning with charitable gifts can reduce or eliminate these taxes. Okay, so when it comes to income tax, which is, of course, governed by the Income Tax Act and regulated and monitored by CRA, what happens is that when you donate to a charity, whether you donate during your lifetime or you donate on death, when you donate to the charity will issue a donation receipt. And with that donation receipt, you as a taxpayer or your estate as a taxpayer would report that receipt as part of your tax return. And what that receipt does as a result of reporting that in your tax return is that it will generate a refundable tax credit, and that will be claimed against your tax payable. That is different than a deduction. So where we have clients that, for example, contribute to an RSP and they in turn receive a deduction, that reduces the taxable income. The credit, however, is a direct offset against your tax payable at the end of your tax year. So when it comes to donating to a charity on death, the benefit is that up to 100% of one's income can be offset in the year of death and the year before death. So someone with $300,000 of terminal income could donate $300,000 to a charity and eliminate almost all of the tax, which is a significant tax savings to the estate. Not only does the estate benefit from the donation tax credit, there are additional benefits depending on what you donate. So if I go back to the Apple stock, for example, and you have publicly traded securities such as Apple stock, it could take on a variety of different forms of what qualifies as publicly traded securities. When you donate that sort of asset to a charity, there's even greater tax benefits than if you were to sell the securities or sell that publicly traded securities and then donate the cash proceeds. And what that greater benefit is that the publicly traded securities that are donated, the capital gains inclusion is reduced from 50% to 0%. So essentially what that means is that the donations of the publicly traded securities are now exempt from capital gains tax that would otherwise arise on that person's death on death. The key, however, is that the wording in the will is important. So if there is a donation to a charity, a $300,000, for example, and there's wording in the will to say that I direct my executors to give $300,000 cash, or if I have publicly traded securities, to give the value of those securities directly in kind to the charity, then what that does is it gives the executor the flexibility to achieve the best tax efficiency for the estate, because with that flexibility, they are able to donate the publicly traded securities in kind by directly transferring them directly to the charity and therefore saving the capital gains tax. So the best way I can illustrate this is through an example by comparing what happens when you donate cash or when you donate securities. So in this scenario, we have two different scenarios. An individual has that Apple stock, as I talked about, and they're worth $20,000. If that person on their death, their executor, sells the Apple stock and it's worth $20,000, and then in turn gifts the $20,000 cash to the charity, there will be a capital gains tax of $2,500. If, however, in that same example, the executor takes that Apple stock and directly gifts it to the charity without selling it, so here's the share certificates for the Apple stock to the charity, and the charity receives it, what that results is in a tax savings of $2,500 because there's no more capital gains of $2,500. So there is a tax savings for the estate of $2,500, and that is the benefit by donating the stock directly in kind to the charity, as opposed to donating cash. When it comes to donating real estate, clients can absolutely do that. You know, perhaps they say as a direct bequest in their will or direct clause in their will to give my home or the property that I treat as my home to this charity free and clear of any mortgage. Okay. And that is definitely a valid gift. The main consideration one ought to give is the charity equipped to receive this type of gift? And this is something, the major takeaway in our presentation is you always want to clear it with the charity first, right? So you would approach the charity at the outset and say, look, I'm doing my will, I'm meeting with a lawyer. I want to ask you, do you have the capabilities and the capacities as a charity to receive this piece of real estate, whether you want to hold on to it or whether you're able to sell it, that's up for you to decide. But is this something that you have the capabilities and the resources to take on? Certainly, if the charity says yes, then it definitely makes it easy from your state administration perspective to gift the real property directly to the charity, because it's now something that the executor doesn't have to deal with per se. They don't need to hire a real estate agent. They don't need to go to the expense of putting it on the market and the time involved with trying to sell the property. It's just as simple as transferring the property from the estate's name into the charity's name. So there's certainly a simplicity piece from an estate administration standpoint, but of course, it's something that should always be cleared by the charity first. Unless the real property qualifies as ecologically sensitive land or certified cultural property where there are different additional tax benefits with gifting those certain types of property, the real property would be subject to a capital gains tax, provided it is not your principal residence or other conditions are met. But typically, when you're gifting real property to a charity, any donation tax credit would typically offset that capital gains tax in any event. Many clients may consider gifting their works of art. So we have clients where that is their way of gifting to the charity, which is through their artwork. And the first consideration that we always have with our clients is is the charity equipped to receive that sort of artwork? If that is not a concern, another tax consideration is if that artwork is considered to be inventory or capital property, because there would be different tax consequences depending on how it is categorized under CRA. Of course, when it comes to gifting artwork, there's always a valuation concern. In order for charity, if they're receiving the artwork, they have to be able to issue a donation tax credit. And that is based off the fair market value of that artwork. And as you can presume, particularly if it's artwork that you yourself have made, it's not a group of 7 painting or something that has been established through provenance, it can become a very difficult exercise for the charity to determine the valuation of that artwork, to then in turn be able to issue the donation tax credit receipt, the donation tax receipt to the estate. Okay. The ways that I've described is where you want to gift certain assets or cash to the charity under your will. There are many ways, as we've discussed earlier in the presentation, where you can gift to a charity outside of your will and through other means, but they would still arise on your death. And that would be naming the charity or charities as beneficiaries on registered assets. So that includes a TFSA, an RRSP, a RIF, or naming the charity or charities as a beneficiary on your life insurance policy. Okay, so in both circumstances, what you're doing is you're going directly to the insurance company, or you're going directly to the institution which holds your RSP and your TFSA, and you're naming the charity directly on that product, in which case, upon your death, those assets are paid directly to that charity or those charities. The benefit of doing that is that it will also result in an elimination or reduction in the estate administration tax, because it's an asset for Ontario purposes that does not fall through your estate, and therefore it is not levied by this tax. So that is another tax strategy that does not deal with income tax, but does deal with estate administration tax that the estate could save if you were to engage the strategy. So Kate and I have discussed everything that happens when it comes to the preparation that is involved for charitable giving as part of your estate plan while you're alive. The question becomes, well, what happens if you pass? And we wanted to just quickly highlight what happens in a scenario where you've now named a charity as a beneficiary under your will, you've passed away. Well, how does that work in the administration scheme of things? So first and foremost, charities are entitled to be treated like any other beneficiary under your will. So if you were to name your sister, your brother, and a charity as a beneficiary, they are all treated the same, because the charities have similar rights as the individual beneficiaries. Executors must keep charities informed about the administration process. So just like an executor has the duty to keep good records and to provide information to individual beneficiaries, they have the exact same obligations and the exact same duty owed to any charities that are, to any beneficiaries that are registered charities. So they're treated the exact same when it comes to information sharing as well. Charities may request information. So they all, as a beneficiary, you have a legal right to receive information from an executor, and you can request information from the executor as it relates to their accounts, as it relates to the decision making, as it relates to the assets, as it relates to timing. And those are things that a charity is entitled to receive from the executor. And then finally, a charity has a right to receive their share in a timely manner once debts, taxes, and expenses are paid. So once that's all dealt with, the charity is entitled to receive their specific cash bequest if it's a fixed dollar amount, or the residual if they're a residuary beneficiary under the will, their percentage of the residue in a timely manner. Okay, so that concludes our presentation. We do want to leave some time for questions. Ultimately, what we would like to leave you with is that charitable giving is both a tax strategy and a values-based decision. And with the right planning, donors can leave a very meaningful legacy. So thanks so much. We'll turn it back to you, Freya, for any questions.
Thank you so much, Sarah and Kate. You covered a terrific scope of content, and you've been very generous with the amount of information that you just shared. I know that there are a lot of important key takeaway pieces for our audience today. We've heard more about including a charitable gift in your will, and that it's a meaningful way to make an impact on the causes that you care about most. And as you heard from Sarah and Kate, it can be thoughtfully integrated into your estate plans. Such a great amount of information, as I said, we're all taking away with us today. If you have further questions, we will follow up to provide you with contact information for Sarah and Kate, and of course, all of the charities included today. And on behalf of Water Canada, Save a Canada, Tree Canada, and Code, thank you so much for joining us today and wishing everyone a lovely afternoon.
Thanks for having us.
Thank you so much. Have a great day.
Thank you.